And let's talk to an industry leader, Sudhir Sitapati, Managing Director and CEO, Godrej Consumer Products, Chairman at CII, National Committee on FMCG. Mr. Sitapati, good morning. Great to have you with us here. Prashant this side. Three basic talking points for our viewers, which we want to discuss with you, sir. Impact of GST cuts, of course. How much will GST cut boost overall consumption, volumes, etc., and any change in growth expectations for FY26, right? So those are the 3 points. Let's just kick it off. Mr. Sitapati, welcome to the program. Could you give us a sense of what do these GST cuts mean for Godrej Consumer? What percentage of your portfolio is impacted? And what kind of volume bump do you see because of this? Go on, sir.
Firstly, Prashant, I'd like to thank the government that both the income tax cut and the reduction in GST across the board, both of these will spur consumption. Consumption has been a bit soft for a few years, but we have no doubt that a combination of these two, income tax and GST, will spur consumption growth across sectors, not just for Godrej consumers, but I also speak wearing my CII FMCG hat. I think across the sector, it'll boost it. I think all of us are committed to dropping prices and passing on the GST to consumers as soon as possible. Now, having said that, to answer your questions, as far as Godrej Consumer goes, the main benefits are in the soap category, which is about 35% of our business. It's hard to judge how much volume growth will come at this stage. Certainly, it will grow faster than what it's grown in the past. But I think one of the advantages of GST is not only the categories where GST has reduced will benefit, but even categories where GST has not been reduced will benefit, because the overall spend on consumption or available spend on consumption and discretionary expenses will go up. So we're bullish not just on soaps or on the products that have benefited through GST, but even on the other ones.
So you're saying, as you see it for now, direct impact is the soaps category for you, which is about 35% of your portfolio.
Yes.
It'll show up the maximum there. Yes. And what is it growing? What has it been growing at? And ballpark, and we'll not hold you down to numbers, but any sense on what can happen here?
The soap category has been growing volumes at about 2% a year for the last 4 or 5 years. So it's not a very high growth category, but it's an essential category. So the category growth may go up by a couple of percent, but more importantly, because it's a reasonably large part of household expenditure at the bottom of the pyramid, it will free money for consumption in other categories.
Hi, Mr. Sitapati. Good morning and good to see you. And clearly, this measure is going to be a bit of a booster shot. But in the near term, do you see some disruptions due to stocks at dealers? Because we have that interim period, right, of roughly around 12, 14 days odd.
There certainly will be some disruptions, mainly because the FMCG sector operates on an MRP regime. It doesn't operate on an end consumer price regime. So, the stocks that dealers are sitting with and what companies are sitting at higher MRP. And just by passing on money to trade, it doesn't guarantee, in fact, it won't go to consumers directly. So there is a little bit of lag time before the MRP changes. Probably early next month or mid next month is when consumers will start seeing the reduced prices on FMCG.
All right, Mr. Sitapati, you said that this move is positive, but it'll be difficult to quantify it, right, in terms of what kind of benefit it could have on volumes, how does it change growth projections. That said, will Q2 be a little bit softish because of this uncertainty in the near term? And were sales as impacted because of heavy rains, adverse weather conditions as well, even prior to this GST rationalization?
Yeah, I think it is hard for me to judge what will happen in September. There will certainly be a lot of pipeline changes in September, and therefore September 15 days could be choppy between now and the end of the month. But I think it's a very short-term thing. I think a combination of the GST price reductions and the available income basket for consumers will certainly mean a good Q3 and Q4 for all of us.
But Mr. Sitapati, you're not telling us that if that translates into this current fiscal, looking better than what you had earlier envisaged?
I certainly think this current fiscal will be better for most companies than what we had envisaged, because this is a meaningful and material change in a large part of ours and other people's portfolio in terms of consumer pricing.
Also, sir, I mean, while GST obviously is a big positive, large parts of the country have received extremely heavy rainfall, particularly in the north. Could that weigh on the way the business is shaped up in Q2? I mean, has there been any meaningful disruption in your supply chains, in your end-user markets, particularly northern states?
There has. In the end of August has been many states were shut down and due to excess rains. But it's difficult to judge. I mean, about 5-6 days were definitely interrupted at the end of August due to rains. But we'll have to see. The quarter will, how things play out over the next 15-20 days. That will have a lower impact, by the way, on quarter two than the changes that pipeline changes on GST will bring in.
At a wider thematic level, sir, when tax on a certain product goes down, I mean, whether it's a hair oil or whether it's a bar of soap, I mean, in your experience, does that essentially leave more money in the hands of people to maybe, spend on other things? Now, we don't know. It could be any other service, any other good. Or does it lead to additional consumption in the same category? I mean, is there any reason to believe that more soaps will be consumed because of a cut in tax at all?
So I think it's a combination of three things. I think firstly, a little bit more soap and hair oil will be consumed, but you're right in saying that essentials are often not very elastic. And the elasticity of, let's say, categories that have gone from 28 to 18 will be higher. So the second thing that will happen is that these essentials are a large part of consumption, so money gets freed up for other things. But the third thing that also happens, which happened in GST 1.0, is a lot of unorganized sector which pays no tax. And which is, often basically, a lot of it is illegal, a lot of it doesn't pay tax. They either come into the tax bracket or 5% makes the branded players who pay tax more competitive when compared to them. So these are the three effects that we expect to happen over the next few months.
Right, Mr. Sitapati. So, interesting to see, interesting times, but the second half of the year obviously should look much better because, things will be rationalized. We'll have more clarity on that front. But, earlier you were talking about, you were giving us a guidance. And do you want to tinker with that? We were briefly talking about high single-digit revenue growth, double-digit EBITDA growth for FY26. Any tinkering out there? And also the India margins were expected to move to mid-20s in the second half of the year. That's on course?
I think so. I think, there's also been some choppiness in terms of raw material at the same time. So I would still say sitting here today that until we kind of see how GST plays out, how it plays out on pipeline, there are too many variables. So I would still kind of say that, what we thought would happen is likely to be roughly what happens. We will see as things go along whether they get better.
Yeah, absolutely. It's great to get that perspective from you, Mr. Sitapati. Really appreciate your time. Thank you very much for joining us here on CNBC TV18. Thank you.